Beware of these 7 factors if you are investing in the markets in 2024. The market saw a stellar return of 20% in 2023, but many money managers are cautiously optimistic when it comes to 2024. The year 2024 has a series of crucial events such as the budget, general elections, and global central banks' policy actions that could actually bring a lot of volatility when it comes to the markets. However, there are other factors too that could be risky for the bulls. I'm Neha Vashisht Mahajan. Let's take a look at these factors. Number 1. Valuations. As per experts, India is trading at premium valuations versus its long-term averages, both in absolute as well as relative terms. On a one-year forward basis, India is trading at a PE multiple of 21.9 times, whereas the emerging market basket is trading at 11.7 times. The valuations of mid-cap and small-cap stocks are trading significantly higher than their long-term averages after the bullish run in 2023. While conducive factors such as India's decent macroeconomic fundamentals, lower global interest rates, reduced election risk could support the premium valuations over the medium term, one could see unfavorable risk-reward triggering correction in the markets. Number 2. Earnings growth. Despite higher interest rates and inflation risks, India Inc. reported robust earnings for the first half of the current financial year. The consensus estimates for Nifty EPS growth for FY24 is 17 to 20% and for FY25 it is around 14 to 15%. Continuity of policy reforms and a pickup in private and public capex is very crucial when it comes to sustaining the earnings growth momentum, and any major reversal in the same could pose downside risks to growth estimates. Number 3. Fund flows. Capital flows were, are and will always remain a key driver for equity markets. In 2023, India saw nearly $24 billion of inflows from foreign portfolio investors. Domestic institutional investors invested nearly $23 billion into the markets last year. However, FII flows are dependent on multiple factors, including global interest rates, liquidity conditions, and the relative attractiveness of India versus other investment destinations, and hence could reverse anytime. Number 4. Global growth. Global growth slowed down in 2023 as a result of high inflation and constrained liquidity due to continued hikes in interest rates. While the easing of inflation in the past few months prompted central banks globally to hit the pause button and also guide rate cuts in 2024, the overall growth rate remains uneven. Moderate global growth could pose a risk to earnings revival for export-oriented sectors such as IT. Not only the US but even Europe, the UK, China growth is expected to be only marginally positive in 2024. Number 5. Geopolitical risks. The war between Israel and Hamas created geopolitical unrest in the Middle East last year. This also pushed the crude prices higher, US bond yields to multi-year highs, and led to a sell-off in equities. Any escalation in geopolitical tensions could be risky for the external sector and the markets. Number 6. Commodity risks. Oil prices hit a 17-month low of $63.64 a barrel in May 2023 due to a major banking crisis in the US and Europe. Currently, crude oil prices are hovering around $71 a barrel, seeing around 13% appreciation from the May lows. Now, since growth in major developed economies is expected to slow down in 2024, the decisive factors influencing these prices will be how the demand scenarios are in the US and China. Lastly, number 7. Elections. Not just India, but at least 64 countries are set to hold national elections in 2024, such as US, UK, Russia, South Korea, and Taiwan. BJP's recent win in India's state elections has more or less set the tone for the party when it comes to upcoming general elections. However, whatever the result may be, the markets will be volatile till the elections are over. If the results somehow don't work in the favor of the BJP, it could affect the markets drastically. Joe Biden will fight against Donald Trump in November 2024 for the seat of the president. In Taiwan, whoever attains victory will fundamentally shape China's approach to the self-governed island, as it has repeatedly threatened with invasion. Well, that is all for today. Stay tuned to ET Markets for more.